Good day, Junior Tickies. I'm Mrs. Bromacombe, and we are going to look at adjustments where our focus now is going to be on interest on fixed deposit. What is interest on fixed deposit? It's an income which we generated from investing money in a fixed deposit. Now, there's also two things that can happen with this. First, interest is not capitalized. Now, if interest is not capitalized, what does that mean? It means interest on fixed deposit is an income which will be credited. If that money is paid into my bank account, then my bank account will be debited. If I have a favorable bank balance, it will be added to your cash and cash equivalent, so your assets will increase. If I have a negative bank balance, it means that bank will still be debited, but now your bank overdraft in your current liabilities will decrease. So liabilities minus on the accounting equation. Interest on fixed deposit, because my income increase, it has a positive effect on the owner's equity. So now what can happen at the end of the accounting period, there's still interest outstanding. And matching says all income must be shown for this accounting period. So we need to account for that income. So when this happens, interest on fixed deposit is going to be credited and accrued income is debited. So your assets will increase. If interest is capitalized, it means that it's added to the fixed deposit account. What basically happens is an amount is invested for a fixed period of time. That amount earns interest, so your investment will grow. And at the end, once this reaches its maturity date, that investment will mature and pay into your account the capital amount plus the interest. So when interest is capitalized, it means interest on fixed deposit is still going to be credited. It's an income. Account debited is the fixed deposit. It means that our assets will increase. If I look at activity 17, show the effect on the accounting equation and indicate how it will appear in your financial statements. So the adjustment says the fixed deposit was invested for a period for 4 years on the 1st of July 2020. Make provision for outstanding interest. Interest is not reinvested monthly. So what is important to understand here? I didn't have this investment since the beginning of the accounting period. We only invested it on the 1st of July, which means we had it for 8 months, this accounting period. So when I'm calculating interest, we need to take 25,000 times 9% times 8 divided by 12. So the total interest for this accounting period should be 1,500. From the pre-adjustment trial balance, we have a total brought forward 889. Our total interest should be 1,500, so there's still outstanding 611, and that must be taken to accrued income. So account debited, accrued income, account credited, interest on fixed deposit. Effect on the accounting equation, assets plus 611, owner's equity plus 611. In my financial statements, interest income is note number 1. It must be shown. Interest on fixed deposit, what is my total interest for this year? 1,500. In my balance sheet, my non-current assets is going to be the same amount as in the pre-adjustment trial balance because the interest is not added to the fixed deposit account. Looking at activity 18, be aware of this type of question. They ask you calculate the fixed deposit amount that will appear in the balance sheet. The interest on the fixed deposit was 48,000. The fixed deposit was invested on the 1st of May 2020 at 8% per annum. So I always say, go back to the basics. I know that fixed deposit times the percentage times the number of months equals the interest. We've invested this fixed deposit on the 1st of May, which means until the end of the accounting period, it equals 10 months. So now it's about solving X. I want to know what the fixed deposit amount is. So fixed deposit equals X times 8 divided by 100 times 10 divided by 12 equaled the interest amount 48,000. So now it's a case of solving X. So to get X alone, my total is 720,000. This is the amount that will appear in your balance sheet under non-current assets, fixed deposit 720,000. Activity 19. Interest on the fixed deposit at Blue Bank is capitalized. No interest has been recorded for the past financial year. The interest rate on the entire investment is 8% per annum. 1/3 of the fixed deposit will mature in 2021 and the rest in 2023. So to find out the interest, this is easy part. 1,680,000 times 8%. I just need to find out what is the interest for this accounting period. If interest is capitalized, it's added to the fixed deposit account. So we have a balance from the pre-adjustment trial balance brought down, 1,680,000, plus the interest, 134,400. Interest on fixed deposit is going to be credited. Effect on the accounting equation, plus assets, plus owner's equity. Now, if I'm completing my financial statements, the interest will appear in your income statement. But looking at the fixed deposit amount, 1/3 is going to mature in the next financial year. It means we need to take it out of our non-current and show it in our current assets. So on my balance sheet, under non-current assets, I'm going to have the fixed deposit. Don't forget to write the name of the bank. I'm going to show 80 million. Try that again. 1,814,400 minus 604,800. Under current assets, I'm going to have cash and cash equivalents, my fixed deposit, 604,800. So I've taken out what will mature, the 1/3 in the next accounting period, and I've shown it under current assets. In my income statement, note number 1, interest on fixed deposit, 134,400. This concludes interest on loan and interest on fixed deposit. So we've looked at different activities where interest is capitalized and where interest is not capitalized. Again, make sure that you understand how to approach it. Thank you very much. I want to leave you with this quote. Every accomplishment starts with the decision to try. Next, we're going to look at depreciation, and we're first going to focus on calculating depreciation on the old plus the new. I hope you have a wonderful day.